Hey everyone, welcome back to the channel. Today we're diving into one of the most reliable and consistent performers in the stock market. One that's not only been crushing it for years, but continues to reward investors with long-term returns that feel almost too good to be true. The stock, Costco, ticker symbol COST. That's right, today's video is all about 3 powerful reasons why you should consider buying this high-performing stock like there's no tomorrow. Whether you're a long-term investor or just getting started, Costco is a name you need to have on your radar. Before we jump in, hit the like button. Let's get 1,000 likes on this one. It really helps the channel grow and tells the algorithm that you're serious about investing. Share this video with a fellow investor who needs to see it. Drop your thoughts in the comments and of course subscribe so you don't miss out on the next important financial investing update. Now let's get into it. Here's a question to get things started. What's more valuable in a time of economic uncertainty? Hype or consistency? Let me know your thoughts in the comments. Because in a world full of meme stocks, market crashes, and volatile trends, companies like Costco are a breath of fresh air. They're not chasing trends, they are the trend. Let's start with what really sets Costco apart, its business model. If you've ever shopped at a Costco, you already know the experience. Giant warehouses, bulk deals, legendary free samples, and that tempting hot dog combo at the food court. But behind the scenes, Costco's genius lies in its membership-based model. Instead of relying purely on profit margins from selling products, Costco makes a huge chunk of its income from membership fees. These fees are incredibly high margin. As of their latest reporting, Costco brought in over $4.5 billion in membership revenue. And here's the kicker, that's almost pure profit. Even better, renewal rates are off the charts. In the US and Canada, the renewal rate is over 90%. That's right, 9 out of every 10 members stick around. Why? Because Costco gives them what they want, unbeatable prices, quality goods, and a sense of community loyalty that's tough to replicate. In fact, this membership loyalty is one of the main reasons Costco can keep prices low. They're not looking to make a big profit off every item, they're playing the long game, and it's working. This brings us to the first major reason to buy Costco like there's no tomorrow: resilient recurring revenue. In a market that's increasingly unpredictable, Costco's membership model is like having a cash printing machine on standby. That recurring income helps the company stay steady even when the economy isn't. Now let's talk about the second reason. Costco thrives in any economic climate. Whether we're in a booming bull market or facing recession fears, Costco performs. When times are good, people spend. When times are bad, people really spend. At Costco. Why? Because when budgets get tight, consumers want more bang for their buck. And no one delivers value like Costco. Think about it, bulk goods, competitive pricing and rock-solid product quality. Even during periods of high inflation or supply chain stress, Costco has maintained its edge. Their direct relationships with suppliers and massive purchasing scale allow them to negotiate favorable deals and keep shelves stocked when others can't. Let's look back to the 2008 financial crisis. While plenty of retail names struggled, Costco remained steady. Fast forward to 2020 and the pandemic chaos, Costco stores were some of the busiest in the country. People trust this brand, and when uncertainty rises, that trust turns into real sales and real earnings. Okay, now let's move to the third reason, and this one's all about future growth. Costco isn't just a United States story anymore. They're rapidly expanding across the globe, with hundreds of warehouses in places like Canada, Mexico, the United Kingdom, Japan, South Korea, Australia, and, here's a big one, China. When they opened their first store in Shanghai back in 2019, it caused mayhem. The store was so packed they had to shut it down on opening day due to crowd control issues. That's demand you just can't fabricate. Their international footprint is growing fast, and these markets represent a massive long-term revenue opportunity. Plus, they're expanding their e-commerce capabilities, investing in digital logistics, delivery services, and fulfillment centers. While Costco has always been a brick-and-mortar giant, they're steadily carving out space in the online shopping world, and with such a loyal base and trusted brand, their online growth potential is significant. Costco Wholesale is showing no signs of slowing down. With a whopping market cap of over $441 billion and an earnings per share of $17.17, this is one of those companies that just keeps delivering solid numbers quarter after quarter. Its current price-to-earnings ratio sits at 58.05, which may seem a bit high at first glance, But when you consider the kind of growth and reliability Costco brings to the table, it starts to make a lot more sense. In 2024, Costco pulled in a jaw-dropping $254.45 billion in revenue and managed to turn that into $7.37 billion in net income. That's the power of scale, efficiency, and a membership model that keeps customers locked in and coming back for more. Even its dividend is looking healthier. On April 16th, the company announced a 12.1% increase in its quarterly cash dividend, bumping it up from $1.16 to $1.30 per share. This is a clear signal to income-focused investors that Costco is committed to returning value to shareholders while still investing in future growth. Now let's talk sales. March was a particularly strong month for Costco. The company raked in $25.51 billion, representing an 8.6% year-over-year increase. Not only did this beat analysts' expectations, but comparable sales also jumped 6.4%. And let's be honest, that kind of growth, especially in the current economic environment, is a testament to Costco's resilience and rock-solid business model. Analysts are taking note too. JP Morgan recently called Costco a clear market leader, pointing to its exceptional operational efficiency and ability to adapt to market challenges. It's not just about groceries anymore either. Costco's performance in non-food categories and its ability to roll out new Kirkland signature products has really helped boost consumer interest and overall market sentiment. Behind the scenes, Costco is also making big moves to strengthen customer loyalty through digital channels. Personalized marketing, tailored offers. These strategies are paying off with higher engagement rates, and that means more repeat customers and higher lifetime value per member. Of course, it's not all smooth sailing. There are concerns being raised about possible tariff impacts and inflationary pressures that could put pressure on Costco's pricing strategy and profit margins down the line. But even here, Costco's fundamentals look strong. Its current profit margin of 3.83% is typical for a high-volume, low-margin business model like this. Yet thanks to its scale, the company still generates substantial profits. Even more impressive is its return on equity, 31.19%. That's a strong indication of how effectively Costco is using shareholders' money to generate earnings. And its debt-to-equity ratio? Just 0.35. That's low enough to give investors confidence that the company isn't over-leveraged, and it reflects a well-managed balance sheet with minimal financial risk. From a broader financial perspective, Costco checks almost all the boxes. Steady revenue and earnings growth, high profitability ratios, excellent liquidity, and effective capital management. It's also worth noting that despite trading at a slight premium based on intrinsic valuation models, the company's dominant market position and unique competitive advantages justify the price tag. Analysts give its competitive moat a score of 9 out of 10, which basically means Costco is built to last and difficult to compete with. Even though we don't have a lot of detailed data on insider buys or big-time influential purchases recently, the level of institutional support behind Costco is another vote of confidence in the stock's long-term outlook. It's clear that this company is not just surviving in a tough retail environment, it's thriving. Now, let's touch briefly on valuation. Costco trades at a premium compared to traditional retailers. Its price-to-earnings ratio is definitely higher than, say, Target or Walmart. But let's be real. Investors are willing to pay that premium because they know what they're getting: consistency, growth, and resilience. Think about it this way. When you buy Costco stock, you're not just buying a piece of a retail company. You're buying into one of the most durable business models on the planet. You're buying into a company that's delivered over 300% returns in the past 10 years, that continues to pay out special dividends, and that operates with a level of discipline that most businesses could only dream of. They've kept debt levels low, grown organically, and avoided the kind of overexpansion that sinks so many other big names. It's a well-run ship in a stormy sea. And that's why long-term investors love Costco. It's not flashy, but it's reliable. And reliability? That's pure gold. So if you're thinking about what stocks belong in your portfolio over the next 10, 20, even 30 years, Costco has to be in the conversation. It's a textbook example of how boring can be beautiful. It's the type of stock that lets you sleep at night, knowing that your investment is backed by a real business with real profits, real customers, and real staying power. Now I want to hear from you. Are you already holding Costco in your portfolio, or are you thinking of jumping in soon? What do you think about the membership model? Let me know in the comments. I love hearing your perspectives, and it helps other viewers see things from different angles too. And remember, Hit that like button if you found this video helpful. Let's push for 1,000 likes. Share it with your investing group or anyone looking for smart ideas in this market. And make sure you're subscribed so you don't miss the next high conviction stock breakdown. Thanks for watching, and I'll see you in the next one.